Every market cycle has one investment that captures massive attention. The asset people believe could create huge wealth, but also carries serious risk. Right now, investors around the world are closely watching several high-risk opportunities tied to artificial intelligence, crypto, emerging technologies, biotech, and speculative growth sectors that could either explode in value or collapse just as quickly. The excitement comes from the possibility of outsized returns, but the danger is that hype often grows faster than reality. Today we will talk about the high-risk investment everyone is watching, so before we get started, make sure to hit that like button, also subscribe to my channel. 10. Every financial era creates a new obsession. Every generation experiences a period where one investment suddenly captures massive public attention. Sometimes it is internet companies, sometimes real estate, sometimes cryptocurrency, artificial intelligence, startup investing, or emerging technologies. These investments usually share one thing in common: they promise extraordinary upside potential. People become fascinated because they see stories of rapid wealth creation happening around them. Social media amplifies the excitement. Headlines create urgency, and investors begin feeling afraid of missing the next massive opportunity. 9. High-risk investments thrive on future expectations. One reason high-risk investments become so explosive is because markets are driven heavily by expectations about the future. Investors are not only buying what something is worth today, they are buying what they believe it could become later. This creates enormous volatility because future expectations constantly change. If investors believe a technology, sector, or company could reshape industries dramatically, prices can rise rapidly long before profits or stability actually exist. 8. Social media accelerates speculation faster than ever. In previous decades, investment trends spread more slowly. Today, social media allows financial narratives to explode globally almost instantly. A single viral post, influencer opinion, or news headline can attract millions of investors toward a high-risk asset within days. This creates a powerful feedback loop. Rising prices attract attention, attention attracts more buyers, and more buyers push prices even higher. Eventually, excitement itself becomes part of the investment story. People stop focusing only on fundamentals and start focusing on momentum, public sentiment, and fear of missing out. 7. Younger investors are more comfortable with uncertainty. Another reason high-risk investing became more popular is generational psychology. Younger investors grew up watching technology reshape entire industries rapidly. They saw startups become trillion-dollar companies, cryptocurrencies create fortunes, and digital platforms transform global business almost overnight. Because of this, many younger investors are more willing to tolerate uncertainty in exchange for exponential upside potential. Traditional slow-growth investing often feels less attractive compared to opportunities capable of producing massive returns quickly. 6. Easy access changed investor behavior. Technology also changed investing accessibility completely. Years ago, participating in speculative investments often required specialized knowledge, brokers, or institutional connections. Today, almost anyone can access high-risk investments directly from a smartphone within minutes. This ease of access dramatically increased participation in speculative markets. Retail investors can now move capital rapidly into emerging sectors, startups, cryptocurrencies, leveraged products, and volatile assets without traditional barriers slowing them down. 5. High-risk assets often benefit during economic uncertainty. Interestingly, high-risk investing sometimes grows strongest during uncertain economic environments. When people feel traditional paths to wealth creation are slowing down, they become more willing to take financial risks, searching for larger returns. Rising living costs, housing affordability problems, inflation, stagnant wages, and economic pressure often increase appetite for speculative opportunities. People begin feeling that ordinary saving and investing may no longer be enough to achieve financial freedom quickly. This creates powerful emotional demand for investments capable of producing extraordinary growth, even if the risks are extremely high. 4. Volatility creates both opportunity and destruction. One reason everyone watches high-risk investments is volatility. Massive price swings create the possibility of enormous gains in very short periods. But the same volatility that creates fortunes can also destroy wealth rapidly. Prices can rise dramatically based on optimism and collapse just as quickly when sentiment changes. Many investors underestimate how emotionally difficult volatility becomes once real money is involved. Fear and greed intensify decision-making, causing people to buy emotionally during hype and sell emotionally during panic. This is why high-risk markets often transfer wealth from emotional participants to disciplined investors capable of managing uncertainty psychologically. 3. Institutions are entering speculative markets more aggressively. Another major reason high-risk investments attract attention is institutional involvement. Large financial firms, hedge funds, venture capital groups, and wealthy investors increasingly participate in sectors once dominated mainly by retail speculation. Institutional money adds legitimacy psychologically because ordinary investors assume professional investors see long-term opportunity. But institutions also increase competition and complexity inside these markets. Sophisticated investors often move faster, access better information, and manage risk differently than ordinary participants. 2. Most people enter too late emotionally. One of the biggest patterns in speculative investing is timing psychology. Early investors usually enter when uncertainty is highest and public attention remains limited. Later investors often arrive after prices already exploded because rising prices create emotional excitement and fear of missing out. This leads many ordinary investors to enter near emotional peaks rather than during periods of skepticism. 1. The real reason everyone watches high-risk investments. The deeper truth about high-risk investing is not only about money, it is about psychology, ambition, and economic pressure. People are drawn towards speculative opportunities because they want faster financial progress inside a world where traditional wealth building often feels slower, more difficult, and increasingly uncertain. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.